Hello everyone, welcome to the stream. Today is FOMC, so I'm not expecting to take any trades today. Obviously, if we go some 15, as always, then there's an exception, but like I say, it's going to have to be 16. Let's get rid of these old drawings here. So, obviously today, more running into all-time highs following yesterday's huge bullish closure. I mean, following this new week opening gap, I really thought that we would have some sort of retracement into it, but absolutely nothing. Okay. Again, all of this is a huge liquidity void. There's gaps on gaps on gaps. So I really do think that we're just going to keep going higher here, especially if FOMC is positive, which it most likely will be. Move my mic closer to my mouth here. So we'll drop down to the H4. Okay, so obviously we reacted off this H4 gap here. Drag this over. Not that we're going to come down to it, but I always just do this just to keep the annotations neat. Again, more H4 gaps here. It's just a huge void. If price is going to come down, I think we're going to just come down and sort of run all of this daily, run all of these daily gaps here and all these H4 gaps. I don't think price is likely to come down and rebalance this area anytime soon, or at least not for today. I'll draw out the range there regardless. So we do have this one here, which is in discount. We can mark this up on the off chance we do get a retracement. And then we'll drop down to the 15-minute as always. It looks like we have an SMT here. The M15. And then I'll also mark up some sell side too. Obviously we have the London high, which is a buy side liquidity here. Oops. So we have all-time highs too. I'm hoping that FOMC, well, the New York AM manipulation before FOMC does come down and take some sell side and give us a nice run up higher. I do think it might be unlikely though. What I'm doing here is I'm just marking up different levels of sell side liquidity inside of this range. I will draw a more recent range in a second here, in case we don't get the pull down, the pullback down here. So this one didn't balance EQ. This one did balance EQ, so we could be just reacting off this, or we could come further into discount. It's difficult to tell, especially when there's high impact news soon as well, or later on this afternoon. So we tapped into this small 15-minute gap here. And obviously we have the new day opening gap as well, just below. I do see some low resistance liquidity here. Type. And obviously we have this prominent low here from the session yesterday. I mean, yeah, that's pretty much it for this range. Mark up the small 50-minute that we're currently reacting off. If we get a closure above this, then it should mean the price is bullish. Although it is quite a small gap compared to the others anyway. Obviously, we reacted off of this one. So I'll mark this up too, since it is a reference point. It looks like ES tapped this gap. So that's where the SMT originates from. ES tapped this gap and then didn't sweep this low, but NQ did. All right, so we've got 7 minutes to market open. I'll be back shortly. Looks like we are getting quite a nice rejection here off this M15. Have this 5 minute as well. And since we did reject off of this M5 here, which caused this impulse move down, mark it out too, just as a reference point. And this one as well, we did reject off. So what it looks like here to me is that we're trapped. It looks like we might consolidate in this range here. We have SMT, yes, tapped this, but NQ didn't. And obviously we've rejected off the 7.5, and we've also rejected off the 7.5. So what I need to see is either this one close below to anticipate a move down, or this one here that we've been rejecting off multiple times close above to anticipate all-time highs getting ran again. Just drop down to the M1 here. Apologies if you hear any background noise. My wife's looking after my 2-year-old son. So You may hear him in the background. We're acting off this M5 again. We're into the market open here. Okay, market open right now. I think price is just that I'm not giving us an entry these past couple of days. So it looks like we saw 830 manipulation down below this low here. So if I look at my playbook, cheat sheet, if you will. The ES is just taking this low, so yeah, so we should just see a 930 expansion here, which isn't really ideal, to be honest. There is definitely an SMT here. There's also an SMT at the lows, so the ES has just taken out this low here as well as this low. This SMT is no longer valid. if ES comes up here and takes out this same high, which would invalidate this bearish SMT. There's the expansion. I do really want to see price come down. It doesn't look like it will though. Looking at ES now, and I can see a really nice A plus setup on ES. An A plus long. I don't really trade ES, and I haven't done any analysis on the higher time frame chart, or even the lower time frame chart, apart from the apparent inversion I can see, as well as the SMT. But it looks like today might be another no trade day, to be honest. I can tell just by going off what market open does, how price action looks before. Like we have a bullish and a bearish SMT at the minute, which is a sign of chop. Okay, so there's a 2 minute. Yeah. The M15 as well, but you do have a 2 minute here. Nothing that I would take though. So if we got this M2 here, it would technically be a mechanical A+, but it's just not a good setup. I'll tell you exactly why. So at the minute, the indices are uncorrelated. So ES is moving up while NQ moves down and vice versa. We have SMT at the highs and at the lows, which also, indicates chop and uncorrelation among the indices. We are trapped between two PD arrays, so we're trapped between this 5-minute here and this 5-minute here. And also we are rejecting off of EQ of the range. Not to mention that we are also deep into all-time highs. So how can you be bullish when, how can you be bearish when this is what the previous days look like? You're trying to call the top if you're trying to take a short here. So we can use this to hopefully get a setup from discount, or potentially a move lower into this larger range as discount. But this isn't good. This isn't good. So if you'd have taken this 2-minute short here, your stop would have been way too big. You would have had a 20-point stop here, and the risk to reward, the risk to reward, the risk to reward isn't there either, really. I mean, you'd be aiming for a 2R, so you'd have to be aiming for all the way down here. And on such a, on the lead up to such a bullish day, especially FOMC, you're going to be lucky to even scrape 1R. Your break even would have been here, so you would have already hit your break even area. You're still holding the bullish SMT. And you really will be sat in this. I just look at this, dude. Like, again, this is a valid long here, but like this 30-second is a valid long. In fact, if I probably wasn't droning on about the 2-minute, then I would have caught this. To be honest, it's actually really nice. But again, you do have conflicting SMTs, so it's a difficult one to really. It looks like, to be honest, 30-second might get validated anyway. And neither of these are a trade you'd want to take, just because of the market conditions at the minute. Conflicting SMTs, uncorrelation among the indices, trap between two PD arrays, all-time highs, FOMC later. You've just got to be super careful, and that's why you'd only take something that's absolutely pristine. And in my opinion, this isn't pristine. This here isn't pristine, and also this 2-minute isn't pristine. They're both very mid, and then when you also incorporate market conditions into a mid setup, you're in this recipe for disaster. These both would have been losses. You would have had to close as soon as they closed among the. Sorry, you would have had to close as soon as the IVG was closed below. So, for example, here, your edge would have been here, right, and you'd have targeted maybe here, all-time highs, whatever. The risk to reward ratio is there, but you also have the conflicting SMT, and you're reacting off this M5. So that's why you wouldn't take that one either. Now this one, on the other hand, this isn't an A+ either. This is an A tier. Actually, it's a B tier. You've not even reacted off any liquidity, and you've also just closed above this one. So this is most likely going to close below as well, and you're just going to get sat and chop. You're going to keep getting stopped out if you keep trying to trade chop. Well, there's your closure below this one too, so this would have been a loss as well. You really need to, in conditions like this, you really need to see a range high or a range low taken before you can even think about taking a position. If you're trying to take a position in the middle of this range here, you're just taking every single inversion you see. That's not how to trade. That's a one-way ticket to blowing your account. This is why you have to have a grading system. You have to have experience in recognizing unpredictable market conditions. But with my grading system, it has to be reacting off of a higher time frame fair value gap. It can be a 30-second reacting off of a 1 minute, or it could be a 2 minute reacting off a 4 hour. It could be anything as long as the gap is a higher time frame. There has to be some sort of liquidity sweep. Internal range liquidity is okay. I prefer external range liquidity. So, for example, this low here and this high here. These are both external range liquidity, and then this low here and this high here will be internal range. This is just terrible price action. I don't know how anyone's trading this right now. If anyone is trading it right now. Most people probably aren't even on the charts because it's FOMC. Yes, it's currently running higher while NQ sticks around. Line up the SMTs, make sure they're correct. They are. This is terrible. Like, if you're trying to take a trade in this, dude, what are you doing? You've got no discipline. You've got no patience. You're just trying to, you're just trying to get a quick win. You're trying to get your dopamine fix. This is not good price action. You can anticipate this because it's FOMC later. And just by taking one look at price action, you can see that we're trapped inside of a range. You can see the constant reactions off of these two gaps here. You can see that we've just reacted off of EQ, yet we're still sticking around in a range. You can see that we've closed out the same inversion multiple times. Here, here, and here, as well as on the other time frames as well. Specifically the M2. We closed out this M2 and then we closed, and we're stuck back inside of it. This just isn't good. We have multiple SMTs. Like, what are you doing if you're trading this? Back into the range we go. Someone definitely tried to long this. In any normal such circumstance, if this 30-second got closed below, this would be an A+. You have an SMT, so ES took the low. You're still reacting off the M5. Sorry, not a bullish short. This would be a valid short in any other circumstance. But because of market conditions, this is where you have to be subjective. Because of market conditions, is this a good short? No, not a good short. M2 is still yet to get closed below here, except for this, but then we close back above it. We still have conflicting SMTs, the market's still uncorrelated. What are you doing? But you need to wait, you need to be patient. Oh, well, we're coming up to the 10 a.m. macro here. Excuse me. 25 seconds here until the 10 o'clock macro starts. Okay, so we finally got some sort of move higher. It's still just super choppy though. Ideally, I'd like to see this buy side swept with an SMT for a move lower, where we can then anticipate price running higher. This isn't really good enough for me. I mean, obviously, I'm not going to take a short setup or anything. But yeah, this is, I kind of want to see lower. If we do leave this, then it'll act as a stronger reference point for price to want to come up higher again. We have a lot of engineered sell side liquidity here. See this. Look at this engineered sell side liquidity. The resistance liquidity here. Looks like ES and NQ are like back on track now. This SMT is now like invalid. Yes, run the high. The NQ hasn't run the high yet. Okay, wait, so ES did run the high. We'll soon find out here in just a couple of seconds. SMT is invalid. Which is, okay, so This bearish SMT was valid, the bullish one wasn't. But how are you supposed to know that when price is doing this? You know, that's why you have to wait for one of them to get taken, one of the SMTs to be invalidated before you can make a decision. We close above this on the 5. We did. We did close above this on the 5. I assume we closed above the 15-minute too. Yeah, we did. So if you were looking at this purely from the 15-minute time frame, actually quite a nice setup. You have a sell side sweep. ES tapped into the imbalance below. NQ didn't. Then you have a 15-minute candle inversing right here. But obviously, this big wick would always pretty much count me out. No, I'm not trying to enter something where price has already rebalanced this high. So if this high was the high that it wanted to go lower, then you've already screwed yourself over by entering here. But obviously, if it isn't, like in this case, then you're fine. But you can't know for sure, you know. You have SMT, EQ. The range is balanced, although it did do it pre-market, which I'm not normally a fan of. But yeah, the 15-minute was okay. I don't trade the 15-minute though, so it's kind of irrelevant. It looks like ES just made equal highs with all-time highs. Okay, there you are. ES just ran all-time highs. And there's all-time highs. Extremely tempting just to turn the charts off because I'm about to fall asleep. I don't think we're going to be able to get anything here. There's not really much. Like at the moment, the only really thing that I can see is if we came down here and swept this, potentially tapped into this gap here. But I don't doubt it's going to do that. Is it just one of those where you can tell that you're not going to be able to catch anything today? But we expected it though, FOMC. And yesterday was awful too. Yesterday AM session, look at this. Like, what is going on? Absolute cheeks. Ooh. 10 a.m. coming up here. "13 seconds. What the 4-hour candle looks like. Looks 4 and half. Let's see what the 4-hour candle is looking like. Not much, to be honest. This M15 is actually an H4 too. Reason didn't notice that. Anyway, it doesn't really matter anyway. I'm not gonna come down to there anyway. There's all-time highs swept. This range is irrelevant because we already balanced EQ. There's nothing here that would make me really want to take a long unless we came down and swept these, but again, like, that's it, you know. I think that's going to be a move saved for PM. Better for OMC. Oh, I think I'm going to go and touch some grass. There's no point in watching this. I'm not going to be able to short off it. And to be able to take a long, I'd want to see price come all the way down here. Sweep this low. Like, yeah, it's just, I don't think we're going to get anything here. Well, that was a short one. Anyway, thanks for watching. And yeah, catch you guys in the next one. Hopefully price action is bad tomorrow, post FOMC. It should be. It should be bad tomorrow. So you see, there's a part of me that just wants to continue watching this and just finding ways to potentially take a long. Like, maybe if price forms structure, takes a low and sweeps into this gap here, but you'd need EQ, and EQ is all the way down here. You know what? Potentially we can just stay on for it and look. Yes. By the way, if this wasn't all-time highs and this was a high time frame gap, like a 4-hour gap or something, this inversion, if this inverts, would be A+. Because it's right at all-time highs, not an A+. I have my conditions here for like the only condition that I take along. Then we find the highest time frame that has a gap here. 4-minute. The 4-minute gap right here. There's nothing in discount. There's also a 3-minute. This M4 is actually irrelevant because we want its tap EQ anyway. Oh, I didn't actually see there's an M3 here. Like if we were to get along here, I'm still not a massive fan. Just because of this low resistance liquidity run down below. And we're so high in the range. But it would be valid. Although not the best subjective play. It's doable on lower risk. Like for example, if we got this we also have a 30-second gap just here, but it looks like we might just keep going down. What's a 3-minute look like? No closure yet, 25 seconds. The 3-minute closed inside this gap. Looks like price wants lower here. Potentially get a sweep of these. Or if we get a sweep of this, and then an SMT at the lows. Because remember, we do have this H4 here. Although actually, wait, is that a lot? That might be a lot lower. That's an M15. So this actually should be a protected low. Yeah, because we took out inside a 30-minute FVG. We already took out a low inside of it, so this should be a protected low. Potential, because I'm not sure. I'm not sure. Remember, we do have this 5-minute here too, which we also swept the low inside of, so this one actually should be protected. I have more confidence in this one being protected than I do the other one. And if it violates this, then I'm going to expect lower prices. See, what's annoying is I wouldn't mind this for a long, but I want this low resistance liquidity run taken. But then there's a protected low right below, and the ES is already taken one of the lows. So there isn't SMT. There's the closure, but as you can see, there's a big wick here. So this makes me think, like, this automatically reinforces what I was just thinking. Like, no, don't take this. If you're unsure, don't take it. You know, if it looks kind of okay, it's passable, don't take it, dude. There's always going to be better. There's always going to be better. Like, you might be kicking yourself right now, like, oh, why didn't I get in? Why didn't I take this long? Look, it's going up now. Because the odds, the risk, the probability. There's like a sixth sense in experienced traders where something could be a mechanical S-tier trade, but you can look at the charts and you can be like, this isn't good. You know, subjectively, this isn't good. And that's exactly what I feel looking at this long here. You know, yes, you have the SMT, but look, you have an SMT right here. SMT. But look, you have a low resistance liquidity one right here. You've got so much engineered liquidity right below your long. And we've already closed below the OTE, so we're not rejecting off OTE. This indicates to me that price obviously wants to go lower. Just the way I see it, you know, and you would have instantly got wicked out there. You would have been kicking yourself. You'd be like, oh, I didn't look good, but I took it anyway, and now I've been stopped out. That's your own fault, mate. You know what I mean? That's your own fault. You should be waiting for something pristine. You'll know when you see it. You'll know when you see it. Anyway, guys, I'm going to end the stream there. I just don't really see anything happening. I don't really see any way that we're going to be able to get a nice trade off this. So, yeah. I'll catch you guys in